Hello and welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay here in Mumbai. And why? Because we all expected a lot of drama in the markets just a day before the big budget, and drama we got. A 2% gain in the mid-cap index, a quadruple ton, 400 plus on the Sensex, and over a ton in the Nifty as well. Big day.
Absolutely, Lata. So 88.50, and it's just that 50-point gap to 9,000. I wonder if we can actually close it successfully tomorrow. All right, let's run through the top stories first up. Fantastic Friday on Dalal Street as bulls stage a comeback just before the union budget. The Nifty rallies 2%, closing at 88.50. The Sensex puts on over 470 points. Banks show leadership with PNB, ICICI Bank and BOB rallying anywhere between 4 to 6%.
Good day for the broader markets as well, with the mid-cap index surging 2%. High beta counters like HCC, Suzlon, Unitech sizzled between 7 and 11%. Railway stocks like Kalindi Rail, Titagarh, Texmaco see good buying momentum as well.
The mega 50,000 crore rupee order for battlefield management system charges up the shortlisted candidate stocks. Rolta vaults 19%. Tata Power, BEL and L&T also see sizable gains.
The macroeconomic survey strikes an optimistic note, pegs full year 16 GDP growth at 8.1 to 8.5%. The survey says the government must aim to limit fiscal deficit to 4.1% of GDP in the current year. Says medium-term fiscal deficit target of 3% is important, but boosting growth may have to take precedence over fiscal consolidation in the immediate short term. Well, that's some of the headlines that dominated mind space in the markets today. Here are the experts that we have lined up on the show for you today. Economist and Niti Aayog Vice Chairman Arvind Panagaria will speak to us about the economic ambience in which the budget will take shape. Pratik Gupta of Deutsche Bank will talk about the broader policy impact on the market, and we will also get you some expert opinion from Sanjeev Prasad of Kotak Institutional Equities.
All right, let's start with the day's action then. The bulls are going into budget day in high spirits after stumbling and stuttering in trade for all of the last 4 days of this week. Dalal Street saw a spectacular rally in trade today. Anuj Singhal is now here with the day's market action highlights. Anuj, it seems the bulls aren't feeling as blue going into budget day.
Well, you can use a lot of theories today. A.B. de Villiers, budget, Modi. The thing is that the bulls were a bit fatigued and the batteries got recharged today by economic survey and by the Modi speech. The market is going into budget with long positions, and that was something that stood out after today's rally, because what today's rally has done is that it's undone the expiry week fall that we've seen. The 4 or 5 day fall has been taken care of by just 1 day of rally, and it was with strong volumes that we saw the rally today. The cash market volumes, in fact, were higher than yesterday's volumes. And also keep in mind that it was a broad-based rally. There was no particular stock or sector that was leading the up move. So really, it was a party for the bulls out there. Let's talk about some of the stocks that led the rally, and really, as I said, it was broad-based. So you had stocks like ICICI Bank, Larsen & Toubro, SBI, all of them doing quite well. In fact, ICICI Bank was the real star, up about 4%, contributing a lot to the Nifty. If you move forward, again, a lot of stocks from various sectors, Bank of Baroda, Tata Power, Larsen & Toubro, all of them up about 5% or so. Ultratech Cement, Jindal Steel, Hindalco, all these stocks were up between 3 to 5%. So there were a lot of stocks, in fact, which were up between 2 to 5%. But suffice to say that, with the kind of stocks that you have seen, you would have got a sense of what kind of day we had in the Nifty. In the broader market, there were some stunning moves in today's trade. Take a look at some of these stocks. Unitech, that's an F&O stock, was up 17%. Rolta was up 19%, was locked on circuit at one point. Texrail was up about 10%. Take a look at some of the high beta space and the way some of these stocks rallied. Hindustan Construction, GMR Infra, Lanco Infra, all these stocks up 9% in trade today. Syntex, Suzlon, Punch Lloyd. I mean, I can go on and on. There will be a lot of stocks which were rallying between 5 to 20% in today's trade. Now, the key is that the budget is tomorrow in market hours. So that will be interesting, because the bulls are clearly going in with a lot of hope, given the kind of rally that we have seen today. It will be interesting to see whether the budget actually takes the market back towards all-time highs, or do we see any correction after the budget.
Thanks a lot for that, Anuj. Just wanted to point out that the railway stocks definitely got a fillip after the economic survey specifically said that probably railways can do for the second NDA government what roadways did for the first NDA government, as in bring in private investment by public investment, giving the thrust. That just lent wings, as you can see, to all these stocks after about noon when the economic survey was released. Likewise, you saw a very big buying in public sector banks. That actually started a little late yesterday when the government announced that it is giving out criteria for selection of new chairmen. That had already fired up the public sector stocks a bit, but today there was no stopping them. And if ICICI led with 4% in terms of gains, look at Bank of Baroda with 5.6% in gains, and Bank of India 6.25% in gains. Union Bank again 5.2% in terms of gains. So clearly big day for banks, expecting that something will come even for them in the budget.
All right, so that was the shape of the market. Banks, infra stocks, capital goods, power. It was pretty much across the board today. Let's get you some market perspective and opinion then. Sanjeev Prasad, Senior Executive Director and Co-Head at Kotak Institutional Equities, says that valuations for the market look stretched at the moment, but the government seems to be making the right moves to boost sentiment.
Value is something which we don't see in this market at this point in time, unfortunately, but obviously that is in the context of what the investment cycle eventually looks like, 1 or 2 years down the line. At this point in time, there is still a lot of issues on the investment cycle. Yes, the government is trying to kickstart it. Obviously there's all expectation at this point in time. What we really require is the private sector to start firing. And I think that's still probably 2-4 quarters away. We still have a lot of challenges which this government needs to overcome in the form of land laws which need to be amended. You know what's happening in the parliament over there. Labour reforms, some of the state governments are doing the right things.
Well, now for all the action from the futures and options space, let's go across to Nigel D'Souza.
Well, the bulls had a field day on the Nifty futures itself. We saw big buying on the first day of a new series. The options data as well looks quite good. So we went ahead and you were punting by buying call options. You would make big money. So 9,000 calls for the premium short from around $90, around $140. The 9,200 call as well. So the premium moved from 40 rupees to 60 rupees. So that's giving you a 50% return in just a single trading session. While the 9,500 call, remember that's a good 600 points away from current levels. But you made some money over there as well because the premium moved from $11 all the way to around 15 rupees. So clearly, out of the money call buying made you big money in today's session. But what's encouraging is that we are seeing low level put trading. 8,500 put was getting written today. The premium crashed from around $100 to around 65 rupees. The 8,600 put as well crashed from around 140 rupees to 85 rupees. That's telling you that around that 8,600 level, the bulls believe they've got a first firm base for the Nifty. The Bank Nifty as well saw big buying after quite a long time, so that was a positive. And stocks like ICICI Bank saw big buying today. That stock, in fact, was high by close to around 3.5%. SBI as well did come in for a bit of a short covering bounce because the stock was high by 2.5%. But take a look at it, no big open interest build up with them. Yes Bank as well did come in for a big short covering bounce in today's trading session. Big shedding was seen on that counter, while Unitech was the stock of the day from the mid-cap basket. Big buying being seen over there. The open interest surged up by close to around 20%. The stock surged up a good 15%. Another couple of stocks that saw good buying with the likes of GMR Infra as well as Ashok Leyland.
All right, Nigel, thanks so much for that. Well, let's move on to the big story then. India is in a sweet spot. There is scope for big bang reforms and the growth engine is set to start firing. That, in essence, is the message from the economic survey, which was tabled in Parliament today. Here is the author of the economic survey, Arvind Subramanian, shedding some more light on those estimates that came out in the report for the economy.
India finds itself in a sweet spot. And, of course, there's that famous line from that famous speech, a moment that comes but rarely in history. And that moment has come because in some ways there is both a political mandate for reform and change, and there is a relatively benign external environment which really opens up the possibility for India to achieve sustainable double-digit growth. On growth, our forecast is for something between 8 and 8.5% for 2015-16. And the reason we say that is we say that for 4 reasons. One, there's going to be the cumulative effect of reforms that should provide a boost to growth. Remember, this 8 to 8.5 is something like 0.6 to 1.1% more than what the CSO said for last year, which was 7.4. And clearly, for our medium-term objective of 3% needs to be met. I think India needs to move towards the golden rule where borrowing is for capital formation on average over the cycle. And as I said, the lessons from history is that expenditure control and the switching from revenue expenditure to capital expenditure are going to be important.
All right, that was the Chief Economic Advisor. Lata, of course, you've been focusing on all the specifics of this report. That 8.1 to 8.5% growth projection has been getting everyone's attention.
Well, just a couple of things. We should not try to read the budget into the economic survey. In the past, that has not always worked. So we must remember that. The economic survey actually makes a very strong case for fiscal consolidation from day after tomorrow, as it were. But tomorrow itself, the idea seems to be that there are quite a few problems. Growth needs a helping hand. The Finance Commission has taken away a chunk from the center and given to the states. So both the ability and the need for fiscal consolidation to be too strong in the upcoming budget is not there, according to the economic survey. That tempts you to think that the government may not stick to that 3.6% target, but that's the caveat. In the past, the surveys have not often been an exact mirror of what comes in the budget. But that is the tack that the survey takes, that there is the reason for only in this budget the government to focus on putting in public investment, probably in certain areas like roads and more particularly railways, so that the economy eases up a bit and private sector can come in. There is otherwise a very strong commitment to fiscal consolidation in the medium term, to take it down to 3%, to not have any revenue deficit at all. So on other issues it makes the right noises, but we will have to wait and see whether the finance minister actually takes that liberty. Barring that, it seems to say what everybody would like it to say in terms of fiscal discipline and expenditure control of seepages in expenditure and a lot of public investment.
Well, the question is, can the finance minister do that balancing act? We'll only have an exact answer tomorrow. Does the government have enough fiscal space to pump prime the economy? On the eve of the budget, sources in the finance ministry say that higher devolution to states has seriously constrained the fiscal space that's still left with the centre. Let's now hear out what Arvind Panagriya, the vice chairman of the Niti Aayog, expects to hear from the finance minister tomorrow.
And I'm talking between 3.6 to 4.1. Now, the bigger issue to me is what else we see, what other actions get taken in the budget, and then how exactly the central bank reacts to what the finance minister does tomorrow. I think, so it's not a matter of the single number of fiscal deficit. It's a matter of a whole lot of things that would have a play in this game of inflation.
Aside from what the economists expect, the markets have been waiting with bated breath for Arjun Jaitley's big budget. What are exactly the stocks you should watch out for? Varinder Bansal has exactly that list.
Well, thank you so much. A lot of stocks will be clearly in focus. On top of the mind is, of course, the housing sector. Any announcement coming, in regard to that housing for all, or any relaxation on personal, taxation front, which is targeted towards the housing sector, will be a boost for stocks like SDL, Unitech, Puravankara, and smaller real estate players. And second thing, what everyone is watching out for, that whether there will be any tax clarity on REITs or not. This has been stuck since last 3 years, and people or the real estate developers are expecting that there could be the REITs may be exempt from DDT and MAT and long-term capital gains exemption for the sponsors. If this comes, this could be good for DLF, Prestige, and of course if MAT is reduced for SEZs, that will be good news for Adani Ports. Banks, of course, especially the PSU banks, will be in focus. Any clarity on the holding company structure, recapitalization of government banks, and any ARC if it's formed for the bad loans could be really good for some of the PSU banks. Oil and gas, focus on ONGC clearly. Any custom duty hike of anywhere between 2.5% to 5%. Positive for ONGC, negative for OMCs. And watch out for subsidy, because that is a very important number. We hear from many analysts that if FY16 oil subsidy number is over 35,000 crore, that is a good news for ONGC. If it comes below 30,000 crore, clearly a bad news for ONGC and Oil India, the upstream companies. ITC, that stock has been always in focus, when it comes to budget. Clearly, 10% excise duty is factored in the market. Anything above 10 to 12% will be negative for ITC, and lowering or no increase in 64 cigarettes will clearly be, positive for ITC. Of course, Titan and jewelry companies will be in focus. Any cut in gold import duty will be positive for Titan. Power sector, watch out for the gas stranded assets. Any subsidy or tax exemption for stranded gas assets will be a positive news for GMR, Lanco, GVK. One thing what we all are hearing is that the renewable sector will clearly be a big thing in the budget. So, keep an eye on any funding kind of a structure like REITs or InvITs, as they say, for renewable sector, or any tax accelerated depreciation method for the renewable sector. That could be important for stocks like, Suzlon. You have Moser Beer, you have, Indosolar. These kind of stocks could be in focus. Metal cement sector, clearly, some inverted tax structure getting rectified. That could be there. Infra road sector, may have a lot of intent. Watch out for that. And also keep an eye on some of this STT, LTCG and STCG, especially the long-term capital gain, because there are a lot of talks that it could be increased from 1 year to 3 years. So that could be important to watch out for. But clearly on top of mind, housing, PSU banks, REITs, renewable energy, these are the focus area in the budget.
All right, Virendra, thanks so much for wrapping up all that specific stock action that we need to watch out for. Time for a quick break now, but coming up, Pratik Gupta of Deutsche Bank will give us his expectations from the budget, and we'll also get you some trading ideas.